Okay, I think we're good to go. So, hello everyone. Thank you so much for joining us today for our Transforming Blockchain Data Analysis, the Next Generation of On-Chain Analytics webinar. My name is Rebecca Stevens, and I'm a research analyst on the data team here at The Block, and I'm thrilled to moderate today's awesome panel. We'll be talking today about a hot topic, on-chain data, and we will discuss how the on-chain analytics landscape has evolved since crypto's inception and how people are engaging with crypto data, whether it be diving into the data themselves or using the data to inform decisions. I'm so excited to be joined today by our fantastic group of panelists who I'll let introduce themselves. We'll just go around in alphabetical order and you can share your name, where you work, your role, and anything else you want to share. So Hildobby, you'll go first.
Hello, everyone. I'm Hildobby. My name on Twitter and everything is, and what I'm known as is Hildobby, so I'll go as this here. I work for venture firm Dragonfly, where I do data. I also previously was a freelancer using Dune Analytics, and that's kind of how I came to be, I guess, in this space. So yeah, thanks for having me. And also, just to disclose, everything I'll say here is my own opinion. It's not Dragonfly's. So yeah.
Okay. Do you want to introduce yourself, Anthony?
Hey guys, how are you? I'm Anthony. I'm a general partner at a venture fund called Innovating Capital. We do a lot of layer 1, layer 2, and off-chain infrastructure investing in the space. We're super active with regards to just being active stewards of the networks. We run validator nodes. We're very active market makers on a variety of dexes. So yeah, excited to chat today.
Sure. I can go next alphabetically. Hi, everyone. My name is Jason, and I'm a product manager at Nansen. Yeah, that's about it.
I can go next. Hi, everyone. My name is Onur. I'm a data scientist at OpenSea. I started my crypto career at Nansen, and before that, I was working at a TradFi institution focusing on ML. Then I joined Nansen, worked on creating algorithms to label addresses, particularly in CeFi and DeFi domain. And beginning of this year, I joined OpenSea, and in these days, I'm mostly focused on NFT data. And another quick disclaimer, everything I share are my personal views. Nothing I'll share is financial, technical, or other advice.
Awesome. My name is Ryan Rasmussen. I'm a research analyst at Bitwise Asset Management. We are a crypto asset manager, mainly facing off with traditional money managers, institutional investors, and financial advisors. So we create index funds and other types of products that are structured for access to the crypto ecosystem for more institutional investors. Yeah, happy to be here and talk about data analytics.
Okay, so as you can tell, we've got an amazing group of people for our discussion today. Also, as we begin, feel free to type any questions that you have into the question box, and we'll have a Q&A session in the last 15 minutes of the webinar. So we can just start by talking about recent trends that we've seen in on-chain analysis. Are there any particular directions you've seen on-chain analytics moving over the past few years in terms of ease of use, accessibility, transparency, and who is exploring and consuming this data?
Yeah, happy to take that to start. I mean, there's been a lot of trends with regards to just how blockchain activity is occurring itself, across multiple chains, layer 2 solutions. So I think a lot of the actual trend that's tied to interchain activity is quite interesting, right? And for the audience, interchain or cross-chain transactions occur when, really assets or data or even tokens are moved from one blockchain to another. This is obviously becoming increasingly more prevalent. You have obviously the rise of Cosmos IBC, Polkadot networks, multi-chain platforms, layer zeros, etc. And so the challenge has been that each blockchain really has a unique architecture, data structures, data primitives, consensus mechanisms, and whatnot. So tracking and analyzing transactions across these different blockchains can be super difficult and require very customized or specialized understanding of each blockchain involved. And so there's been a lot of great progress from Nansen and Chain Analysis and a variety of providers that are conforming different standards across these multiple blockchains, and that also extends to L2 solutions as well. So I'd say that's one trend that we're definitely looking at tapping into, especially as that becomes what we view as the future of Web3.
Yeah,
I think another thing is.
Oh, go ahead, Hildobby.
Okay, sorry. I think another thing is that if you look over the past 2 years, before when you were like a data analyst, you also needed to be kind of a data engineer and kind of work on the whole back end. And now with tools like Dune, Nansen, Flipside, whatever, all these, it kind of abstracts all this work away and it puts more in the power of basically this random anyone's hand, people like me who just come out of nowhere and just come and look into the data. And I think that's pretty great and really scales the amount of analytics that can be done, can be worked on together with multiple people. And yeah, I think it's all a great sign.
Does anyone else have anything they want to add? Okay.
Yeah,
so then going on from that.
Sorry, I was just gonna to build on that. I think that we have seen a lot of progress in the uniformity of data. It's made it a lot easier to look at things at a higher level and look at projects aggregated maybe up by sector or groupings of projects, especially helpful in the DeFi space. I know that when we're talking to investors, when we get down into the activity on individual platforms, we start to lose them because they may not be as DeFi or crypto savvy as a lot of people that are really deep down the crypto rabbit hole. So being able to talk about sector-wide metrics like revenue or trading volume across exchanges and being able to aggregate those, whether they're on the L1 or the layer 2 or maybe on multiple chains like Anthony was talking about, makes it really, really powerful to talk about the entire ecosystem, entire sector, and entire applications reach versus having to try to walk through individual assets and the nuances of individual assets on certain blockchains. Having that whole picture and having it readily available has been a really big improvement in using the data and having access to the data in a canned form.
Mm-hmm.
Cool. So you guys just mentioned some of the improvements that we've seen over the past few years. But as it stands today, what would you say is the biggest challenge when it comes to doing on-chain analysis or on-chain data?
I can take that one. I think the biggest challenge currently is building accurate abstractions and attributions, because I think it's easy to think crypto is this decentralized database, but you have to take that raw data and turn into something more meaningful. Say you are particularly interested in decentralized exchanges, you want to analyze trades happening on decentralized exchanges, you want to look at trends and some metrics. You have to accurately tag the decentralized exchange trading data from the raw data. And crypto is evolving every day. It's changing. There are new protocols popping up, existing protocols change and evolve. So you have to be on top of everything and accurately build abstractions to get meaningful and accurate insights.
And I'll add an extra point about this, since Onur and I probably have the similar history, which is making your abstractions backwards compatible over time. As people update to new versions and new smart contracts, the metadata changes. So then you have to figure out a way of okay, well, how do I show the volume for a DEX over time when the underlying proxy contract changes over time? How do you show it in a consistent way?
I think
I'd say
the biggest blocker still to me to like good analysis is mostly people's understanding of the actual underlying data, and that's what leads to as Onur said, like a lot of wrong abstractions because people misinterpret things. Also, one thing is that these research pieces are often live, where keep abstracting new things. So you need to account for this and make sure they're more future-proof, and maybe there's new things that come into play that completely change everything. So there's a lot of also of maintenance to be done, and But I think the more people are working tangibly together on this, the more powerful we are, and the more we can maintain this.
I'd say another challenge that's becoming more prevalent as data analysis becomes such an integral part of just the ecosystem overall is obviously just identity tracking and pseudonymity. Obviously, a lot of blockchains offer certain privacy preserving aspects to them. While transactions are typically transparent, a lot of the identity of certain actors might be hidden, or you might have multiple addresses controlled by a single entity, single address used across multiple entities, whatever it might be. And obviously, as this becomes more prevalent in the space, and certain attributes, CK snarks, things like that, that continue to make this a fundamental and integral part of ecosystems moving forward, it'll obviously subsequently make analysis much more challenging as you attribute on-chain activity to a specific actor or specific ecosystem.
Yeah, one other challenge that I think is a good problem to have in a way, but definitely creates a lot of challenges, is the pace of innovation in the crypto space. We Jason and Onur kind of talked about it a little bit, like the fact that we're having new iterations of protocols and new applications being built daily, new chains spinning up all the time, creates this need to continually stay on top of changes to the metadata, changes to abstractions, being able to ingest new data and aggregate it and normalize it in a way where it's all uniform. And so I think it's a good problem to have that we have so much growth in the space, but the fact that we are growing so quickly and the industry's expanding so widely, it's making it really tough to ensure you're capturing everything in your analysis. And we all know how closely crypto Twitter and the industry kind of looks at data because it is all right there. And so it's really easy to unintentionally miss something, but then have that kind of spun as morphing the data for your narrative. So I think it's just really, really important to make sure that you're having comprehensive quality data, but it's really hard to do when the space is growing so quickly.
And maybe adding another piece to that is one challenge that a crypto data analyst has to always keep in mind is some of those like raw data abstractions are not necessarily telling you the whole picture. And there could be, so say you're looking into an L2 and you're looking at, oh, like there's like a huge number of, there's a big increase in the number of users. That doesn't necessarily mean that L2 is doing so well. It could just very well mean that users have an incentive to transact on that L2. So being on top of the recent developments and accurately understanding the intentions behind some of those activities is very important, and like so you can build some models and filters on top of the data.
Yeah, it's a good point. We've seen a lot of confirmation bias in retail activity, and to an extent it can become a self-fulfilling prophecy for a period of time. But to Onur's point, there's certainly a lot of caveats, and a lot of users, when they're looking at data, should most fundamentally ask, first and foremost, why is this happening? Especially when it comes to a lot of liquidity incentives and short duration epoch incentives and things like that.
Okay, all good. Well, not good to have challenges, but all good to be aware of them. And then on a challenge that kind of Anthony hit on, are there any strategies that you guys use when you're dealing with the unknown entities on the blockchain, like pseudonymous addresses, like maybe unverified smart contracts that can't be parsed? How do you approach those situations?
It really depends on what the objective is with the data itself. But for the most part, I think the general rule of thumb is, if you are engaging in some sort of strategy and you're trying to execute on that strategy, if there's a high degree of unknowns, typically the underlying strategy is probably not worth it. So it does help in a lot of ways to actually make that point of validation, whether or not it makes sense to even continue down, let's say, a certain path. Or you might just decide, what, it's not even worth, even exploring this specific strategy that we've developed.
I think there's to like check, when you're looking into an address, I personally use like multiple ways, and that is mostly checking what's already out there on that address, and that can be checking on DBank, Nansen, GitHub. GitHub is probably the biggest. Twitter, all these, and making sure you're not missing anything. And if it's not anywhere, it's probably not identified yet, and hopefully someone identifies it later on. But there's also this kind of maintenance work where if you look at a set of addresses, for example, I'm looking at for ETH staking and trying to make sure I'm up to date with the entities that are tagged. And that is a constant work of, okay, every once in a while, I'll go and check if there's new addresses that pop up and haven't been identified, but have actually been somewhere else.
Yeah, and to add on Anthony's point, the real world identity is just one aspect or characteristic of an address. If you're working your way backwards and you're saying, hey, I'm trying to understand, is this person likely to stake or unstake? Other behavior traits are also very useful without necessarily revealing or without necessarily needing to reveal who the address is, right? So it's more of, do you have the right set of data to help you make a decision? And very often that right set of data doesn't have to end up with a like a name or identifier that we need in real life. Just
Yeah, totally agree with that. I think like not knowing the person behind the address is actually one of the superpowers of blockchain, I think, and it's probably a positive, but also knowing a lot about the address. So I don't know who the person behind the address, but I know that the address has been interacting with NFTs, so I know that it's an NFT user. I know like how long it has been since the address did the first transaction. I know what kind of activities the address is interested in. So I actually know a lot about my user base, even if I don't know who they actually are, which could be more than enough for the use case that I'm interested in.
Yeah, I think Onur makes a good point too with regards to both Jason and Onur with respect to the underlying real world entity may or may not be as critical depending on what the underlying strategy or objective with the data is. I do think a lot of the factors or variables that would have made it much difficult, such as shielded transactions and certain privacy preserving traits that would have made a lot of this very, very challenging or difficult, for better or for worse, and for a variety of regulatory reasons and industry trends have really, we've moved away from a lot of those specific primitives. So I think that's one thing that's also been somewhat of a positive tailwind from a data analytics perspective.
Cool. Okay. And then kind of also on the topic of like actually doing analysis on chain, how do you determine which key metrics to look for in a protocol? Obviously things in like decentralized exchanges, looking at volume makes a lot of sense, or then like in a lending protocol, looking at outstanding debt. But then there's things like users that are applicable to everything. How do you determine like what's the most useful metric to look for in a protocol? And also how do you determine how to calculate them?
I think there's two kind of things in terms of data that I look into, and there's one that is for people to view dashboards, and that usually I'll go for the more simpler metrics, which are user count, transaction count, volume on all these. But then if I'm looking at it, trying to actually understand more into the data, I'm probably going to look into user retention numbers and all these maybe a little less easier to grasp metrics that are interesting to me, but might not be as much to the wider audience that I have on Dune, or so it really depends what you want to do and what your goal is with that data. There's the high level picture, and then there's more narrowing it down and trying to see if there's a certain things you're looking into that is interesting.
And I'll add one more thought to that, which is it would be great if the metrics you're calculating for a particular protocol can be comparable in an apples-to-apples basis across protocols. So just because I can calculate a metric, incredibly useful for protocol A, but if I can't calculate for any other protocol, significantly less useful than the protocol which is not, the best measure, but is apples to apples measurable across the entire chain and maybe even cross chain?
Yeah, I think that's exactly right. There's kind of two things that we're thinking about when we're looking at on-chain data is what metrics are actually indicative of real traction and real activity on a protocol. On DEXs, a lot of times that's trading volume. It's also important to understand what kind of revenue that's generating, where that revenue is going. But to be able to compare those across different applications, like Jason was saying, is equally important. Otherwise, you don't really have context to judge whether it is, a good investment or whether it is, seeing really strong traction relative to how other protocols have grown. So I think both of those things are equally important. And it's helpful when they're normalized metrics around traditional analysis. So revenue, trading volume, outstanding loans, interest revenue are all really important metrics when we look at DeFi protocols. But equally, yeah, it's important to be able to compare those to other applications. Otherwise, you're kind of sitting out in no man's land with some really cool data, but no way to contextualize it.
Yeah, I think with the rise of a lot of DeFi activity, and there's been a lot of NFT DeFi symbiosis recently, and I think there's been a ton of metrics that are potentially misunderstood or used improperly. This could be anything from LTVs to total value locked, whatever it might be, which are really something that's just a point in time and could quickly revert. I think from a long-term perspective, it's important for really users to take that kind of longer-term outlook. Is the underlying protocol from a fundamental token economic basis lining up, and is it sustainable? So we really spend a lot of time looking at the burn rate and a lot of the protocol revenue metrics. Things that are maybe not as sexy, or really just kind of more top line driven as well. Understanding the fundamental things that will drive deflationary components of the network versus just what's the activity of the network right now.
All good things to look at. Okay, and I know Hildobby mentioned looking at like dashboards, and there are a lot of data sources out there, but there are a lot of community-run sources. So when you approach one of these community sources, or a source with or a data source that maybe you don't know who's providing that data, how do you verify that the data you're getting is correct?
How do you verify that the data? Well, the beautiful point of the blockchain itself is that most of the data can be easily verified. So if you go back to, I was talking about deflationary mechanics and token burn and whatnot. You can easily verify that if a project is saying, here's our level of protocol revenue, here's our level of token burn, right? Has this amount of coin been sent to a cryptographically secure, unspendable address, right? And so there are certain things that can be quickly verified and checked. I'd say, for the most part, that's probably the most beautiful aspect of blockchains in general, being able to iterate and recursively go through every single block at a point in time and parse that data. And so I guess your question might have been more towards dashboards and data providers. Again, it goes back to the trust but verify aspect of some of these centralized entities like Nansen or Chainalysis, and they are very robust in what they do. But on the flip side, what they've built has leveraged a lot of on-chain analysis, so it can easily be verified. So I would, definitely encourage users to maybe do their own audit or back test, or some random sampling if they are concerned or want to verify it, which should be relatively simple. And everything that's done for the most part is open source with respect to the code and how it's working.
Yeah, I think there's multiple ways to check. There's the way where you can ensure that it matches what you see on other sources. I know I'll often work on, for my dashboards, I'll work on the backend engineering part and submit to Dune Spellbook so that I know really what's going on, or at least I've looked into it, and maybe I'll send it to teams like OpenSea and ask them, okay, can you actually ensure that this data is correct, or is it not? And if not, what is incorrect? But I think, just making sure that the teams themselves agree with the data, probably, to me, the easiest way to ensure that it is correct. I also try to keep in touch with those teams and make sure that when there's an update, whether it's a V3 or whatever, they, I'm aware of it so that I can actually react in time. But yeah, it's always, of course, a game of trying to be constantly looking into it and making sure that nothing new arises that you haven't considered.
Yeah, I totally agree with Anthony and Hildobby here. And maybe like something that is so simple but very effective, in my opinion, is doing some sanity checks. Like there's some very easy sanity checks that you can do. Like for instance, a token not having larger market cap than Bitcoin, for instance, or I don't know, an NFT is not getting valued at $1 trillion. So I think even using those like very simple sanity checks can let you catch some issues with the data, because as we have said before, the data is constantly changing, protocols are evolving. So there's a very high chance that at some point something is gonna break in your model. So having these sanity checks are extremely helpful.
There's also some data that can't necessarily be verified. So when you try to interpret the data, you might be the first one to actually publicly do this, or might not have a source to check against. And so there's, for example, like I made a NFT wash trading filter, and there isn't really necessarily a way to ensure, okay, this is 100% accurate, because it isn't. It's more of a decent approximation. And the way to ensure that it makes sense is more like, okay, wash trading starts to pop up when LooksRare launch, which makes sense. But you don't really, it's not necessarily quantifiable metric, but it makes sense with what you observed in the space and the kind of metrics that you've seen. But of course, like these new things, you can't necessarily say, okay, I've checked it, I've ensured it's correct, but by publishing it, I also think that it actually comes back your way, because people will point out flaws in your metrics and everything. So that's, I think, also a power of open source metrics and open source code.
Cool. All good things to think about when using data sources. Also, like kind of on the topic of don't trust, verify, how do you find the medium between relying completely on a third-party source, which might be easier to use, they might have an easy API to access, but you don't really have any control over the data, versus running a node, which is a little bit more complex, but then also you have complete control of what you're getting?
It really goes back to the underlying objective or use case. And obviously everything comes from economic reasoning, right? If we're deploying a large amount of money in certain areas in the ecosystem, we're not going to rely on third parties. We're going to run our own infrastructure on any network that we look at. We're going to run our own nodes. We're going to make our own RPC calls to the network. We're going to figure out exactly what's going on and build our own dashboards, right? Now, that might not necessarily be a economically sound model for anyone who wants to engage in certain activities. And I think Onur makes a lot of good points with respect to, if you are relying on, let's say, off-chain infrastructure providers, centralized entities, where you can't necessarily there is an aspect of trust. You have to trust, but you can still verify it, and you can still instill reasonable, sound sanity checks on a lot of that. So it's certainly not necessarily so black or white. I think it comes down to what's the economic threshold of what it is that you're trying to do that should guide that decision.
Yeah, and everyone who's done work with data, it's the standard trade-offs between precision, accuracy, and magnitude. If you don't need super high, like if your decision is whether or not this is a 0 or a 1, you could probably open source 3 different data sources, and as long as they're all kind of grouped together, you're like, okay, that's probably right. But then if you need something that's accurate and precise down to as many 18 decimals, then probably worthwhile to run your own node and double check that number.
Yeah, I think it all depends on the decision that you're looking to make. Exactly. So whether you're looking to make a large investment, then you might want to run your own node, aggregate your own data, check that against other sources, make sure that you have the entire picture, you're not making any mistakes. But if you're just like writing educational research or looking at long-term trends of certain areas of the space, I think it's just with other data analytics that Jason was saying, 80% of the data is going to get you there. So whether you're looking at every single DeFi protocol's revenue or the trading volume across every single decentralized exchange, or looking at the top 20 decentralized exchanges and aggregating trading volume there, directionally you're going to see what the big picture is. And so I think it depends on what you're using the data for, but generally speaking, I think as long as you have majority of the data, you can look at long-term trends and have some key takeaways that are insightful.
Yeah, I mean, a lot of foundations too have made it easy to interact with their ecosystems, whether running like their own SDKs or open nodes, and they do obviously have a lot of explorers are becoming a lot more powerful and robust than what they were even just a couple of years ago, and so there is a lot of data that can be easily obtainable directly from the project's foundation itself. And I think there's a lot more developer resources and toolings that are giving you maybe not, again, the direct access point as if you're running it yourself, but a bit of a couple steps closer to it.
I agree with the don't trust, verify kind of things you guys said. But I think also as a counterpoint, there's also running your own infra kind of is much harder to maintain. You have to put work into this and make sure it's accurate over time. Whereas I think relying on more broadly used solutions, maybe community-based analytics or whatever, means that the more eyes are looking into one table, maybe the more it is likely to be flagged if something is wrong, especially if the team itself behind that data is actually looking into it. I know I've had experiences where they come to me and say, hey, can you fix this because we changed things or whatever. So I think it really depends on what you're trying to do, and both are viable solutions. The only thing is, I think it's really hard to build the entire pipeline of the entire crypto ecosystem in your own. Eventually, we're going to see more and more people relying on solutions where a lot of the work has been abstracted away.
Adding on to Hildobby's points here, I think it is kind of like similar to running your own on-prem server versus depending on a cloud provider. There could be something very sensitive that you don't even trust a cloud provider such as AWS or GCP, and you have your on-prem servers, but that is going to come with another cost and you have to maintain it. And it depends actually, like if you think which one is safer and more suitable for your use case. But like as he said, I think there are lots of advantages of depending on some reliable third-party sources, like such as Nansen. Like you can use the abstractions and attribution models built by them. The data is directly ingested into a cloud platform, which makes the life like much easier. Being able to collaborate and debug if there's something wrong. So I think like it comes down to your particular use case, and depends like how sensitive it is for you to have like super accurate and reliable data. But both have disadvantages and advantages, I'd say.
Yeah,
it's probably a good analogy. Is probably like similarity to also like smart contracts, where the more they're used, you never know whether it's fully bugless, of course, but the more they're used, maybe the more potential bugs have been flagged out, and thus the more trust you can have maybe in Uniswap v2, because now it's so widely used that the likeliness of a bug being there is actually pretty low, whereas a new contract is more likely to maybe have some bugs. So I think kind of is a similar story here.
Mm-hmm.
Okay. So I think a lot of you guys mentioned while we were talking about that, like some tools you use as a medium between the two. So just like to get it all out there, like what are some of your favorite tools to do on-chain analysis, or even just like broader crypto data?
Nansen. As ex-Nansen, I'm a little bit biased, but we are closely collaborating with Nansen team. Kudos to Jason and Nansen team here. It's one of my favorite tools. They're super nice and they have very reliable models.
Yeah, I love Nansen. Also love Dune Analytics. Dune is just great in terms of, especially for a lot of kind of retail activity. I use it for maybe more of the origination side. When I think about like tools from the phase of design through execution, I'd say my general rule of thumb is the farther we are from the design phase, we use more third-party tools. The closer we get to execution, it's more our own infrastructure. But Dune is great, and it goes back to that being able to really verify, because everything is open source, and you could run it yourself theoretically. Everything's right there.
Yeah, I also like Dune. I use it a bunch, but I really like the fact that on Dune I can build essentially my own internal pipeline on their own spell book, and that is very transparent, and I can see also what others have built and what each table actually relies upon, and try to trickle it down back to the raw data. So it actually makes a lot of sense for me to not basically be able to see what is actually going on rather than just trust. So yeah, I kind of like that. I also like seeing who built that data, because there's a lot of things where I'll start to trust people the more I've seen reliable data from there. So yeah, that is also something I enjoy.
Yeah, our team uses a lot of data providers, so we use the block quite a bit as on most of the research that we're writing. It's really helpful to have data aggregated from a few different sources, and it's an easy to use dashboard. The data is available to us, the underlying data, if we want to slice and dice it any way that we want. But we also use Dune Analytics quite a bit. I know I use tons of the dashboards that Hildobby creates and maintains. So kudos to him and team for always working on those. And I do think it's really helpful on Dune to be able to see who the different Dune wizards are. You can see what they've built in the past. You can see people that are using the data are favoriting it, and really kind of attesting to how strong it is. One beautiful thing about Dune more recently is that more and more large research teams are creating public dashboards that are available, and they're annotating those dashboards. So you don't just dive in and see charts and data points, but you also see an explanation of what those data points mean, maybe why they calculated it that way, or how they calculate it. So I think that's a really interesting element that's developed on these publicly available and maintained dashboards. So Dune, the block, we use Nansen as well, and Token Terminal a good amount. It kind of just depends on the level of detail, honestly, that we're looking at things for. So Token Terminal and the block is really great at aggregating high level data. Nansen and Dune is really useful when you're diving into protocol specific or specific activity that you're looking at. And yeah, we also use Coinmetrics and Chainalysis for some on-chain data. I think Chainalysis is really, really great at looking at like flows of assets between exchanges or entities. And Coinmetrics is just, great on-chain data whether you're looking at stablecoin activity or trading volume or market caps or anything like that. It's helpful to be able to pick and choose which assets are included in the queries and stuff.
Yeah, I mean, I basically use all the data products out there as like as part of the job. I think the only thing I want to add is, like, in terms of the next generation of on-chain analytics, some of the more graph-based things could be cool, like just prototyping internally. Okay, this is a very cool graph. Like, what can we do with just beyond just like the standard set of like A transport to B transport A? Like, what are the new things we could do? I think that is a lot of stuff I've been thinking about. Like, how can we make this better than just like a table,
Yeah, something that's not necessarily that we haven't touched on. It's not necessarily directly on-chain analytics per se, but I think it's super important, especially for long-term value creation and just thinking through being fundamental stewards of these networks. If you're buying a token, staking, running a validator, etc., are third-party audit providers and some of the research and reports that they might put out, Certic, Red4Sec, etc. A lot of these providers do go very, very deep, whether it's auditing a specific smart contract implementation to really fundamentally understanding the treasuries of some of these projects, the underlying lockup mechanics, and overall emission schedules and whatnot.
Okay, lots of good tools out there. Also, thank you for mentioning the block, Ryan. That was great. I also use the block because I like work here. So then now moving on from like using analytics to like or doing analytics, actually using them, like are there any standards or practices or specific metrics you look for when you're informing investment decisions or strategy decisions at your business?
I will shell the Nansen smart money wallets. I think it's a very unique value proposition in the space. We calculate PNL for all the wallets on chain. We pick the smartest, and they're, anybody can follow them and see what they're up to.
I think it comes back similar to a previous question where there's kind of two ways to look at stats for a protocol. It is comparing it to the other protocols and seeing how it fares against the others out there in an apple-to-apple comparison way. And then there's looking at deeper into the stats itself and try to see if there's anything weird going on, or there's anything going on at a deeper level. So yeah, I think both are interesting analysis and should be factored in if you want to look deeper into protocol-specific metrics.
Okay. And then looking forward, so we've already seen so much change in the scope of in the landscape of on-chain analytics. Like we have seen all these tools that you guys mentioned. It's like so much more prevalent. Is there anything that you think like you could see the space moving in the next 5 years, and like how can on-chain analytics like increase transparency in the space?
I think one thing that I kind of mentioned this earlier, but one thing that will really help evolve the space over time is just proper disclosures on data when you are building dashboards or when information is publicly available, or whether it's third parties, really documenting in a way that's easy to access what's included or not included in the data set. So it's something I constantly find myself digging into further. Is like, okay, I know that this application just launched on a new L2. And so when I pull revenue for that application, am I getting all of that activity, or is it missing a key piece of it? It has a lot of activity migrated into Arbitrum, but we're still only pulling the L1 data from Ethereum. And so if I'm seeing a fall in activity, is that reflective of actual less usage, or is it just factor of not picking up the other side of the movement? And so I think it's really, really helpful to be able to just kind of click into the information on some data set or on a Dune dashboard, or when the block has information around what's inside the data set, to be able to see exactly what's being captured or what's not being captured. And I think that it just become more and more important as the ecosystem expands over time, so that people can easily go in and use these sources reliably and understand exactly what they're grabbing and what it's including or excluding.
It's a little bit of a cliche these days, but I think AI will play a huge role in not so distant future. Like I think it will be possible to decode the crypto data with AI. Like AI will be able to say, like you plug in a transaction, and will be able to say, this transaction is a DEX trade happening on Uniswap, like user, whatever is like trading ETH to USDC at that price. It's just going to be able to decode it by itself. So I think a lot of the abstraction and attribution part of crypto data will be handled by AI, I think in the near future.
I think in terms of AI, a small nuance where, because AI tools are going to be more accessible, it's also going to lead to a ton of trash data that people misinterpret into being completely accurate. So I think in the short term of whenever that's more easier to do, actually is going to lead to an explosion of bad data, but maybe on the longer term actually sieve out the good one and see, also go back to who are the trustworthy entities that know to verify that this AI generated query or whatever is actually correct. Of course, AI is also going to get better over time and get increasingly good at surfacing accurate data. But I'm actually kind of cautiously optimistic for the short term, because I'm not sure it'll necessarily only be a good thing.
Yeah, and I mean, to that point as well, if everyone has access to the same level of data, then, really what is the underlying edge, right? There's a lot of times there needs to be some sort of asymmetry with respect to access to data, interpretation of data, and what you're using that data for, to find some sort of meaningful advantage. So I think one big caution is to just absorb as much data as possible and try to react. I think that's a lot of people can certainly get burned that way. And again, it goes back to the concepts of falling into certain fallacies or confirmation bias and things like that.
Okay, and on that note, we have a little less than 15 minutes left, so we'll get into some of the questions from the audience. You can upvote the questions, so I might go in order of upvotes, but there were a few questions about AI, so I'll just do those first since that was kind of on topic. Okay, so do you know if there are any AI-driven initiatives that can ease labeling and abstraction of on-chain data?
AI-driven initiatives that can ease. I mean, the thing is, there's been obviously an AI boom right now, but AI is, people have been using a lot of automation and AI for the last couple of years. So there's been a lot of custom tooling that exists. A lot of it is open source and available on GitHub that you can honestly use for consistent automation and, to a degree, intelligence, computer vision methodologies and whatnot that leverage a lot of this infrastructure. Actually, one of our companies, Pastel, uses something to really actually detect the relative rareness of a given NFT versus another one. So they use basically deep learning, a variety of different models and convolutional neural networks to actually detect if something's a fraud or a copyright or a scam or things like that. And people have actually been using that same exact technology for predictive analytics around what might be the next biggest collection based off of certain attributes and whatnot. And all that stuff is open source and available to use.
I think AI is also a bit of a buzzword where it's not necessarily AI that's not going to radically change everything on data, but I think I still overly rely on heuristics we have defined and have agreed upon. What I'm interested in though is AI surfacing heuristics we haven't remotely thought of, or these hidden features that we couldn't even imagine to exist. That is, I think, going to be very interesting to see what it can surface in that area.
Yeah, so maybe running XGBoost on a large feature data set and then running a classifier based on the features that you didn't know could work. I think those kind of classifier problems, which I think is what this question is asking about, those classifier problems, I think is something you can probably solve. And it's I wouldn't say it's AI. I would say just regular OML as opposed to AI.
Yeah, I don't think there is. As far as I know, there is no initiative, but I think it's just a matter of time. I think it's someone is just going to take a very large language model and just fine tune it on blockchain data, labeled blockchain data, and I think it can give very accurate results, surprisingly. But to answer the question, I don't really know if it exists, but I think it will, even if it doesn't today.
Cool. Okay, there's one more AI related question, but you guys also kind of hit on it in your answers to the last one. But if anyone has anything else to add, so far we see a lot of descriptive on-chain analytics. What is your view on on-chain predictive AI or modeling?
Yeah, I think it falls into the trust but verify camp as it continues to grow in popularity. I think we've all, or those of us that have used ChatGPT for various things, is a lot of times you get something that's pretty useful, but sometimes you get something that's completely wrong or a poor interpretation or output for what you're trying to achieve. And so it can be really helpful to make it more efficient in doing data analytics. But if you are if it's kind of those garbage in, garbage out things that happens, in data analytics. And so I think it will be great as it makes some things more efficient, but you still need that human element of interpretation when understanding what is this data saying, what does it mean, what's it pointing at. And maybe at some point in the future, AI will become accurate enough to replace the human interpretation of that. But I think for a while you can use it to help guide your potential conclusions, but I think they still have to be verified by the individual analyst.
Yeah, I think the way AI can help analysts is actually more on the coming up with maybe things you haven't, like I said before, and the same way I could have used maybe Midjourney, where I have a phrase I want to say, and I actually don't know how I would even remotely picture it, but it's going to give me creative ideas that I couldn't have thought of. And that's probably the same for heuristics. If I say, hey, what heuristic should I use to determine this? I already probably have some in mind, but maybe you can help make it strengthen this set of heuristics by proposing some more that I haven't even come up with. I'll still probably never, like, at least in the near future, not plug anything straight into AI and like directly trust it, but act as an intermediary where I see what the AI probably proposes and interpret it myself to actually still have this interpretation layer where I'm in control.
I think that's probably something that a lot of data analysts inherently will lean towards, because I think, the more you spend time analyzing data, it's the more you're like, okay, I got to look at everything underneath the surface myself. And I can't, like, sure, this person may have said this, but until I verify it, until I see the numbers that add up, the parts that make up the sum, I can't really feel comfortable with it. And so I think data analysis is one of those interesting areas of AI where the people who are using the output still need to see all of the parts, just, by nature of, I guess, working in analytics over time, you lose this sense of blind trust in data sets or in findings.
Yeah, I think also the longer term positive is that eventually AI is going to be able to do it by itself, the very simple analytics, and it actually is going to push up the bar for analysts themselves to actually look deeper and come up with more interesting stuff maybe that hasn't been done yet, because we're still very much scratching the surface in terms of what analytics are there. And yeah, I think it'll lead to maybe a push up towards this better analytics, I guess.
Okay, so now just moving on to some of the seemingly popular questions. According to you, what will be the biggest business applications of on-chain analytics in the coming years?
I think it depends on the field that we're talking about. I mean, as more use cases for crypto expand beyond just looking at decentralized financial applications and NFTs, I think it'll become increasingly important to be able to analyze the underlying fundamentals of the business, whether it's music NFTs and seeing which artists are driving the most engagement with their different NFT collections, or whether it's seeing for Starbucks, for example, who just recently launched Starbucks Odyssey, which is expanding their loyalty program with digital collectibles, right? That's allowing them to kind of get an entirely new data profile for a lot of their users. And so understanding the success of a business initiative, how much traction are they growing, being able to easily identify the revenue or royalties they're generating, secondary sales is one element, but also being able to gather and interpret new data around the users is equally important. So I think it'll just continue to expand. Supply chain is another interesting area where we'll continue to see increased adoption of blockchain, in my opinion. And there's so much data that'll be available and that will be publicly available for the first time, which will just, I think, unlock amazing new insights for both consumers and business operators.
Okay, next question. And I think depending on how this might be our last question because we're running out of time. Can you discuss your process for determining subsectors or groupings of on-chain activities? Are there any industry groups working to align on definitions, methodologies, terminology, or classification systems?
I probably sound like a broken record on this one, but within the DeFi sector, I think it's really rather straightforward in the different groupings and breakdowns of the different sectors, just because it's aligned so much with traditional finance. And so you can look at trading, lending, asset management, insurance, derivatives, and start to really think about how to group those categories. With NFTs, you have different types of NFTs, arts and collectibles versus gaming NFTs. So I think that it's more obvious for some arenas of crypto than others, but DeFi is one of those areas where I think it's really, really straightforward to group things by sector.
Yeah, I guess also depends on like the use case and what your objective is, and what your domain knowledge is as well. Like you can create like many groupings. Like one very easy example is you can just like group users, power user versus like more casual user based on their activity. As we have discussed before, we don't know who the person behind the wallet is, but we know a lot about the wallet and the user just by looking at their on-chain activity. So we can use like all sorts of ways to group them into different buckets and analyze and get a better understanding of our business and other businesses in crypto. I don't think there's like one standard or agreed upon methodologies and definitions yet. But I think you can just like get very creative and create lots of different groupings and methodologies.
To add on that, I think it depends on what the problem you're trying to solve is. If it's an investment or if it's to make a map of things, groupings which are human understandable. I think that's one methodology. And if your methodology is to try to group or classify things in a certain way such that it ascribes to a certain distribution, and then use that distribution to do some kind of statistical analysis of the data, and then use the distribution and statistical analysis to do a secondary analysis, like that would be a completely different set of work than something you would if you want to, trying to compile it into like a encyclopedia or wiki article to say, this is insurance, this is borrow lending, this is XYZ, right? So I think it kind of depends on what is the outcome you want, and then working your way backwards and making sure your classifiers fulfill some kind of meaningful distinction such that they result in a better analysis.
I think also in terms of classifier, since like you said, again, you're dealing with like live data that constantly evolves. There is one thing that is kind of troublesome, which is that your original labeling may actually need to evolve quite a bit, where, for example, it used to be quite distinct between a direct marketplace and an aggregator, but now it's a little more nuanced there. Or also like the lending NFT protocols. Yes, sure, they're all lending NFT, but they're very different in the system, in the way they work. So should you really label them all the same? And also like even staking, where there's staking pools and there's liquid staking. So then what is the rocket pool? Which one is it? It's actually both, really. So, there's more nuance where you got to consider those small edge cases. And it makes it hard to actually have data that you can present in a high level that is easy to understand without 15 edge cases, because I think that deters from the original point of, as our job is essentially to present the data in a way that is very easy to understand and make sure that you can grasp the chart straight away. I think that's the way I personally see my job.
Okay, and that is all we have time for. But thank you so much, everyone, for attending. And also thank you to our panelists for all your amazing insights. It was a great time. And hope you all learned a lot, and have a great rest of your day.
All right.
Thanks for
Bye-bye.
having
Thank
us.
you.
Bye.
Thank you.